And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. And if you caught last week's show, we talked very broadly about the process of buying just one single family rental house to add to your portfolio of investments to throw off cash flow. All the reasons why we do that, talked a little bit about the process, and I mentioned one of the very important tools in our toolbox as real estate investors, and that's hard money. And you can devote an entire show to hard money, so I didn't get into that last week, and I told you I was going to bring someone on to help us dive into that today, and we are going to make an entire show about hard money again because it's a very important tool. So this is an important show for you if you want to buy single-family houses, duplexes, triplexes, quads, renovate, make those things shine, and make a ton of money. So be sure to listen to the entire show. If you have any questions for me after this show, if you go to our website, lifestylesunlimited.com to catch that prior show or any other shows, and you have any questions after that, send me an email to askandy@luinc.com. So without further ado, I'm joined today by Paul Starnes, and he is with Investmark Mortgage. And Paul, I was just looking at our vendor hub, and this is something that every member at Lifestyles Unlimited has access to. You guys have been vendors since 2010. That's a very long time. Over a dozen years now with Lifestyles Unlimited. We'll get to Investmark. I want to learn a little bit about you, Paul, before we go there. Can you give us a little bit of your background, if you don't mind?
Yeah, absolutely. Thank you. My name is Paul Starnes. I am with Investmark Mortgage, and I'm very local. I grew up in Rockwall. I finished up at North Texas, bought my first house over in Corinth. So I live in Florida now. Got 2 kids, married. And, man, I've been investing since I got out of college, and then I found Lifestyles around late 2000s, 2008, give or take, and I've been with Investmark for about 8 years now, and it's been great.
And if I remember from past conversations, and I say past conversations for the listener, I see Paul at all the Lifestyles events. When I go to a case study, you guys are out at some of the single-family road trips. We'll talk about that. You actually became a member at Lifestyles Unlimited, I guess, about 2008 or so. How did Lifestyles help you as an investor? I'm just curious. You were experienced already, but what did you take away back then?
So what I was doing is the way I started out is I was buying foreclosures, and I was single, and I'd live in them for a couple of years and then sell them. And then the market tanked. And then I was like, I need to change my strategy. And I was listening to the radio show, actually, and I heard Lifestyles Unlimited, and I joined. And, boy, Lifestyles Unlimited is a great education. If there's anything that stands out, it's just what you learn. And, I went to the classes. They had classes. I don't know how they do it now, but I went to all the classes. I went to the 2-day. It was fantastic. Just the education in the context you meet, and then also, for lack of a better word, the contractors and all the people you meet. Like I met Mike Hanna with Investmark Mortgage. He was doing my loans. The contractors, the 1031 people. So it's just great education contacts was what did it for me.
Yeah, and you met Mike there. He's the owner of Investmark Mortgage, and I guess a few years later you joined the team there. Tell us a little bit. What does Investmark Mortgage do?
So we are a private money lender, also known as a hard money lender. And the hard money comes from, we lend off the hard asset, which is the house. So that's how hard money lending, the hard asset, that's how that name came about. So Investmark Mortgage, we do hard money lending for investment properties. Most of the time it's single family. We also do some multifamily. When I say single family, 1 to 4 doors. So your single family, your duplex, 3-plex, or 4-plex. And we also have a private 30-year loan, not conventional, but private, for people who don't have W-2 or no income verification, or you just have more than 10 and you have a hard time getting a conventional loan. So we do hard money, and we have a 30-year private loan.
Yeah, for the listener, I'm maxed out on when Paul says 10, I was able to do 10 Fannie Mae backed loans. That's where Fannie Mae is insuring the conventional loan. That's where you get the cheap money. Even in today's environment, it's going to be cheaper than a lot of the stuff out there. But you can only do 10. I did 10. My wife did 10. So that's how we maxed out those buckets. But at some point, you got to do something else. And yeah, this 30-year program, I've talked about the DSCR program before on shows, the debt service coverage ratio. It's just asset backed based on the cash flow. It's a great product. But that's a more advanced tool. What I want to talk about today really is the basics of hard money. For a lot of the listeners out there, people get started with their first house. Maybe they do a handful, and for a lot of them, they need to look at this tool because it has a lot of advantages for us, the investor. You can buy straight conventional. You can do 15 or 20 or 25% down. That's one way to go. And Paul, I think we'll look at some examples, but that doesn't work in every situation. So why don't you tell us why would I use hard money?
Okay, so let me just define hard money. Hard money is a short-term loan that can include rehab funds to buy an investment property. And we're going to learn a certain percentage of that house. Probably an example might be the best way to go before we get cut off. But hard money is to buy a distressed property, a non-owner occupant investment property. And usually ones you're buying are going to be in bad condition. You can't do that with a conventional loan. Hard money it's just like cash. It's a quick close. Conventional is not. A lot of the houses you're looking at, you can't go 30 years. So hard money is a great solution to get into a single-family house that needs repairs, and your out-of-pocket's going to be a lot lower. So you have two choices with buying a distressed property, either cash, like you got to bring all your cash to the table and all your cash to rehab it, or you can use hard money and use like a third of the money.
I'm your host, Andy Webb, and I'm joined today by Paul Starnes. He's with Investmark Mortgage, and we heard a little bit in the first segment about Paul and about Investmark. I mentioned Investmark has actually been a vendor with Lifestyles Unlimited, serving our clients since 2010, so over a dozen years now. Paul himself has been an investor for an even longer period of time, so he brings a lot of experience, and I love that when I am able to work with other vendors, contractors that have been doing this for a while, that have gone through a few cycles, right? We're heading into or are in another cycle right now, and we're going to dive into hard money, Paul, and I just want the listener to understand, I've bought a lot of houses over the years, and with two exceptions, we've always used hard money. And we've always used it for the reasons you described. We had to close fast. We needed to present as cash without any kind of financing contingencies. We couldn't wait for a Fannie Mae backed loan to take 45 days to close. Or just simply put, the condition of the property, it was just so beat up with broken windows, bad roof, foundation 7 inches down in one corner, all kinds of things going on. No conventional lender would lend to us. So hard money addresses those situations and several others as well. But Paul, I think for a lot of us, the real question comes: where does the money meet the road? And this is where hard money can really help us, is with our cash out of pocket. So take us through an example of when we would use hard money and how that affects the bottom line, if you would.
Yeah, so again, hard money is to buy an investment property. And the easiest example I give people, so we lend off the after repair value. After it's repaired, it's going to have a higher value than what it is currently because you're buying a distressed property. So the easy example I can tell you is if the ARV, the after repair value, is $100K on a property. Let's say you're buying a very entry-level property. I guess that'd be, I don't think there's any more $100K houses, but let's say the ARV is $100K. And we're going to lend 75% of the after repair value. So our loan is going to be $75,000 on an ARV of $100K. All right, so a loan amount $75,000. So if you're buying this distressed property, let's say you're buying it for $60,000. Let's say the rehab is very simple; it's $20K. So 60 plus 20 is $80,000. If we're loaning $75,000 and it's costing you $80,000, your out of pocket is going to be $5,000 plus closing costs. So maybe around $10K. So you're buying a $100,000 house with $20,000 in rehab for $5,000 plus closing costs. So that's basically how it works.
So essentially, if you talk to somebody that's looking in the market right now to buy their first personal house, their owner-occupant property, there are FHA programs out there where they can pay as little as 3.5% down, 5% down. we as investors can never get there. It's either, like you said, 100% down, which is all cash, which we discourage you from doing because that limits your ability to do more investment houses, more properties. If you go this route, what I'm hearing is we're getting into this for as little as 5%, 6, 7% out of pocket, right?
Yeah, if you find the good deals, and it's all numbers, just doing your numbers. You're going to your purchase price, your rehab, and then your after repair value. And with those numbers, we can kind of get a good idea where your out-of-pocket's going to be. And one of the best things I do for people is called a deal analysis. And our clients are coming to us, they're out there looking, or they're finding properties from Lifestyles Quest. But we're evaluating that property and trying to give you an idea, hey, how much is out of my pocket to get into this deal? What's my cash-on-cash return in equity? So we break down those numbers with the purchase price, rehab, ARV, and also the rental income. And that's the deal analysis is a huge tool to help people in regards with getting an idea of what your out-of-pocket is going to be.
Yeah, and I want to take your example there. You had ARV. When I fixed it up, the market value will be $100K. You're lending 75%, so I'm borrowing $75,000, and we said that the rehab is 20. So out of pocket in the analysis is about 5K plus closing costs. Let's just call it 10K. If I compare that to a conventional loan, let's say I'm able to buy this conventionally, and that 20K is all going to cosmetic work. So Fannie Mae doesn't care about cosmetics. Paint's a little funky. Okay, whatever. So in that case, I got to go in as an investor. The best rate I've ever gotten is 15% down. I don't know where those are exactly now, but let's say it's 15%. Well, that's $15,000 out of pocket already. Plus, I now have to fund those repairs. That's another 20K. So we're at 35 right there, plus closing costs. Just one closing in this case. Let's call it 40K. So you're already at 40K out of pocket compared to 10% out of pocket. They're 10% down versus 40. That's a huge, huge difference. So, Paul, if I can find more deals like that, I can do 4 to the conventional one, right?
Well, yeah. And one of the biggest keys is with all the investors out there, if you're trying to go straight 30, well, that's 30 to 40 days, right? When some other investor is using hard money, and they say, hey, I'm bringing an offer cash, as is, and I can close in, 5 to 10 days. So you're always going to be in that situation.
Yeah, and for the listener, I know there's a listener sitting out there thinking, after repair value 100K, what are you talking about? That's not possible. Take the number 2, multiply that by each of the numbers Paul just gave you, and that'll take you into where we are now. ARV 200K. They're going to lend you. They're still lending you 75%. Well, instead of 75, now you're getting $150,000 as your loan. Rehab's probably going to be higher if there's any majors involved, foundation, roof, whatever. 40K is a good number, so you can just multiply to get to a different scenario. But the math, like you said, Paul, that's all it is. That's all it is. And I love that you're able to sit down with a potential borrower or an existing client and just run the numbers. How long does that take you? Do I have to wait a couple of days for a reply?
No, I always tell people, hey, let's do it right now. Let's do it on the phone real quick. And then what I can do is I can follow up with kind of put that on paper. But it takes 5 minutes maybe, and the whole key is really knowing your numbers. Hopefully, if you found a property, and the one thing you'll know would be the purchase price. And then if you physically go out to the house, you'll kind of have an idea what rehab is, or get your contractor out there. And then we'll have a good idea what the ARV is, especially if you're using Quest. Quest can help you do this as well. Or your lifestyle realtors. They're really good at helping analyze numbers like this.
Yeah, for the listener, Lifestyles Quest is a product. It's an application you can use where you can run your own. You're tapping into the realtor's MLS, and you can see sold comps in that area to figure out what is my market value or what is my projected market value. And you're able to tap into lease comps. These are all the things I need to know. We talked about this, in fact, on last week's show, getting to those sold comps, getting to those lease comps to make sure I'm going to get the equity capture I want in this particular investment, and am I going to get the cash flow that meet my investing criteria. So yeah, Quest is a way to get there. Just tapping into your favorite realtor if they're open to helping you. That's a great way to go. And Paul, you mentioned closing fast. You're able to turn your deal analysis around very quickly. And I've seen investments where I've had to close in as little as 3 days. Is that common, or what's your normal window?
I would tell people, hey, give me about 10 days. Yeah, but yes, we can close. We've closed stuff in 3 days a lot. You really need to have your stuff ready to go, but we can do it. We do require an appraisal. Lifestyles Unlimited does require an appraisal and a survey as well, but we do require an appraisal, and we lend off that certified appraisal. And again, it's going to be an after repair value, so it's not going to be as is. But we can do it in as little as 3 days, but I like 10 days.
Yeah, we'll get into the process in a little bit finer detail in the next segment. By the way, you said Lifestyles does not control your investment. They're not involved. We don't require you to do that. It's in your best interest to get an appraisal and a survey. We'll talk about that after the break.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
The rich get richer and the poor get poorer, not because that's the way it's set up, but because of the knowledge.
When put into action, knowledge is power. At Lifestyles Unlimited, we empower you to live the lifestyle of your dreams through passive real estate income. For over 30 years, our successful members have shared their knowledge through case studies, classes, and mentoring. Tap into that knowledge. Attend a free workshop online. Register now at lifestylesunlimitedworkshop.com.
Welcome back to the show. I'm your host, Andy Webb. And if you have questions for me, email me to askandy@luinc.com. Again, askandy@luinc.com. I'm talking today with Paul Starnes. He's a member of the Investmark Mortgage team. That's one of the hard money lenders that if you are a member at Lifestyles Unlimited and you are seeking somebody to lend you short-term money for a project, you would go out to our vendor hub potentially, and you'd say, all right, I want to find a hard money lender in Dallas-Fort Worth. Well, Investmark Mortgage is one of those that you're going to find. You're also going to see that they've been vendors since 2010. They're multiple award-winning vendors, in fact, with our organization, and they are ranked 5 out of 5 stars by those members that have ranked them, that have used them over that, dozen years. Paul, you guys have really been helping the membership base for quite a long time. I know I met Mike, the owner, years ago when I first joined in 2012, and he's always been a great source of information. He not only talks about hard money, but he's given some really good presentations on my favorite topic, protesting those property taxes. We'll shelve that for a couple more months. That'll come back around, of course. But today we're talking hard money. And Paul, we're going to get a little bit more into the details. I just gave out my email. Is there an email or something you'd like to give the listener for your contact?
Absolutely. First of all, you can go to investmarkmortgage.com. That's our website. But my direct email is paul@investmarkmortgage.com. I'll give you the direct phone number. It's 214-738-4664.
Okay, 214-738-4664, or email is paul@investmarkmortgage.com. Paul, let's talk a little bit about the process. We mentioned appraisal is part of the process for you guys, and you mentioned survey. I will say, for the listener's sake, I haven't always done a survey during the hard money part of the process, but thinking bigger picture, when we buy with hard money, do our renovations, at some point, because it is short-term debt, it is higher interest, I want to get out of that loan, and that's when I get into conventional or some other type of lending. At that time, normally we'll have to get a survey. So whether you do it now or later, that's up to you. But let's talk broadly about the hard money process. First of all, how do I qualify?
So we make the process easy. The process is go to our website, hit the orange Apply Now button and apply. It takes 8 minutes. The markets we service would be Greater Houston, Greater San Antonio, Greater Austin, and I handle all of North Texas and even some in the East Texas. So we do some deals out in Tyler here and there.
Okay.
So the first step is apply, which takes 8 minutes.
Okay, so you're doing Paul Starnes is representing Dallas-Fort Worth, East Texas. Then you've got folks in what we call Central Texas, and then where else did you say?
Houston, Gulf, called the Gulf region, Houston, Greater Houston area.
Okay, so you're in all the major markets here in Texas. Okay, gotcha. I tend to see. I mean, for the listener, if you ever get out to one of our case studies, you will see Paul there. He is very much a fixture. I always get a chance to talk with Paul and see what's going on. So to qualify, it's just an online process. Is there a lot of documentation? Is this kind of like when I go to my conventional lender and say, hey, I'm looking at doing a loan. What do you need to know? Tax returns, bank statements, all kinds of PITI stuff from my other properties. What kind of detail? How hard is that?
Hard money is so much easier, and this is what I always tell. If you're approved for a 30-year conventional loan, you're automatically approved with us. All I need is a bank statement. I just want to see some cash there. But 8 minutes, I'll call you back within 1 day. We'll review your application. If it looks good, I'm sending an approval letter. But I do want to make sure that you have a firm exit strategy in who you're refinancing with, because that's your exit strategy. I do want you out on my loan as soon as possible. It's in your best interest to get out and keep repeating the process. So it's very easy to apply and get approved.
Okay, and I'm just curious, I mentioned on last week's show, a lot of people are of that mindset. They're the type A personality. They're like, fire, I bought a house. And then they're ready, aim. Okay, now what do I do? Do you find people applying ahead of, are they thinking ahead and getting their ducks in a row, getting their hard money lender figured out, getting their conventional lender figured out, then finding the property? Or are people tending to come to you when they got that contract in hand?
It is better to come beforehand. It's always better. Just like if you're buying a personal house, you're not going to go out looking without being approved, So you definitely want to be approved first. You definitely want to have everything ready to go. I would say, come to us and apply real quick. If it takes 8 minutes, there's no reason why you can't get ready to go.
8 minutes.
And then you definitely want to talk to me. I love talking rentals. You're talking to the right guy. Like I said, I've been a member for a long time, and I love talking to people. So I service a lot of the lifestyle members.
Yeah, 20 years experience personally for Paul. And let's talk more specifically about the process once I find a house. So I've already applied. I've built my team ahead of time like I should. I know I'm going to work with Investmark Mortgage. I know who my takeout or my refi lender on the back end is going to be. I find the house, Paul. I'm sure this is a good deal. You've done your deal review. You said, hey, this looks pretty good. 2 thumbs up. What's the actual process now to get to the closing table on that house using hard money?
Yeah, so the buyer's going to have a sales contract, and once they're in that sales contract, send me a copy. I'm going to start working with you. I'm going to ask you, we're going to reach out to title and start working the process behind the scenes of getting all the paperwork ready. I want you to go get insurance. I want you to have a written rehab bid. Again, we're appraising this subject to the rehab. You're going to get an after repair value. So I need a written rehab bid. And then I also want access to the property for the appraiser. So again, the process is sales contract, insurance, rehab bid, access for the appraiser. Once we get that number back in, we're working with title to get everything ready to go, and firming up your HUD or your closing statement to give you a really good idea of what your out-of-pocket's going to be or what final out-of-pocket is going to be, and you're ready to close. So we'll follow the sales contract, whether it be 10 days or whatnot. But again, sales contract, insurance, written rehab bid, and access for the appraiser. That's really the process.
And for the listener, really that rehab bid does need to be written because that goes to the appraiser. Because what's he doing? He's going out and looking at this ramshackle house, but trying to put an after repair value on it. So guess what? He needs to know, or she needs to know, what work are you doing to the house? Are you putting in mica countertops in the kitchen? Are you refinishing the existing countertops? Or are you going to do granite? And with that information, they'll look at the sold comps in the area, and that's where they dial in that after repaired market value, off of which Paul and his team are going to lend that 75%. And, Paul, I talk to a lot of hard money lenders out at networking events, and I'm just very close to them because I've used you guys so much. The hard money lender, that 75% is the market rate nowadays for rentals, is it not?
That's correct, yeah. So we have a lot of lenders to choose from. But hopefully we like to, just being able to talk to people and really answer questions, that's huge. And someone that actually practices what they preach. But 75%, that's the standard in the industry.
Yeah. And going back to the appraiser, I know not all hard money lenders will use an appraiser. I think the investor is sitting there thinking, well, that saves me, $400, $500, $600 But just a quick story, Paul. A couple years ago, I did a project over near Fort Worth, and we had a certain scope of work. And the appraiser for the hard money lender went out there and he said, "Well, if you do what you've projected, this is where I can put you in terms of market value. Let's say 150K. But if you do these couple of extra things, you're going to come in closer to 200." I said, "Great, I can do that for dirt cheap." So that extra feedback through your process, through the hard money lender's process, gained me a lot of equity, and that's really the name of the game.
Yeah, let me tell you that happened to me on the opposite way. So I bought a house in Mesquite, right? Tax rolls had 1432 square foot. I was like, perfect, great. And we went out there, did the appraisal. It actually was measured 1230 square feet. So I lost 200 square feet. And so I got to go back and kind of, hey, listen, the house didn't measure. Here's the written, the square footage measurement from the appraiser, and I got to get a house reduction there. So that's, if your square footage is $100 a square foot, that's $20,000.
I'm your host, Andy Webb, and I'm joined today by Paul Starnes. He's with Investmark Mortgage. He personally has been an investor in real estate for 20 years now. He's been with Investmark Mortgage. How long now, Paul? What did you say, 2010? Almost a dozen years yourself. And we talked in an earlier segment about why you would use hard money, the more concrete reasons, just the condition of the property, have to close fast. But as well, we got into a little bit of an analysis, Paul, and I just want to stress this because anytime I approach an investment, and there have been times where I could have gone straight conventional, and I chose to go hard money. And the reason is simply put, the numbers. I just sat down and I ran the numbers side by side, and my cash out of pocket to do the investment using a conventional loan and funding the rehab myself was going to be close to double what I was able to do with a hard money loan. So you're able to have a lower cash out of pocket, which allows you to do more investments. And that is the name of the game. That's what we talked about on last week's show, is creating that cash flow snowball by adding one house and then another after that and then another after that, to where you meet your expenses with that passive income. But to get there, you need more properties in your portfolio. And this is the tool that gets you there. And Paul, talking to the process, we mentioned the appraisal. That's where you send out an actual appraiser. They're going to take my scope of work and figure out what that after repair value is. That drives all the lending. Let's talk a little bit more now about the scope of work. How does that play into the duration of the loan? You guys fund the repairs, but you do hold that back in escrow, meaning I can't tap into that immediately, correct?
That's right. So the way the rehab funds work is, rehab funds will be included in the loan, and then on day one, when your contractor's ready to get out and do the work, you're going to have to front him some money, whatever you guys agree on, or whatever his policy is, and for supply labor materials. And then when you're ready to get your rehab funds back, we will fund on tangible improvements of the property from that rehab bid. We keep it really simple. So if you go out and on your rehab bid is foundation, $5,000 HVAC, $10,000 roof, whatnot. If you do those in the first week, you can do a draw request. The draw request is a single page. You fill out your house info and access and what you're requesting from your rehab, and you submit it. It usually takes a day or two to turn it around. If you submit on a Tuesday, we send a certified inspector out there on Wednesday, and we wire you the funds on Thursday. Sometimes even faster than that. But that's how quick the process works. And again, what you need to remember is we fund on tangible improvements of that property from that rehab bid. So it's a pretty simple process.
Yeah, and it's an important process, and I do like to point this out. What I heard there is, well, first of all, just more broadly, a hard money lender is really my business partner. I've got Paul. If I've got an investment, he's going to vet the opportunity before I even pull the trigger, hopefully before I'm under contract, right? So I've got a set of eyes there. We've got the appraiser going out. We already heard how that helped me create some extra wealth, helped you save some funds as well. So we've got an extra set of eyes there. Now, as we go through this repair escrow process where I'm drawing down those repair funds, you're sending out an inspector who's putting an extra set of eyes on the property. Paul, I interviewed a lady, Kara from Colorado, a few weeks ago. She's bought some houses in Houston. I don't think she's driving down from Colorado to Houston to inspect those as the work goes on. This draw inspector will, however. So it's an extra set of eyes. If you're out of state, you really do want this as part of your process to confirm that the quality's there, that everything's getting done. So I have to have the work done first, Paul, before you guys will return that draw or that repair escrow to me, right?
Absolutely.
Okay. Makes sense. I think it was a bit of the wild, wild west a few decades ago, and maybe that wasn't part of the process. And lenders have gotten smarter. They said, hey, we need to make sure you're doing the work and doing it right. We want to see that it's done well.
Yeah. And just let me add one point. One thing that differentiates us from other lenders is we do not charge interest on the rehab funds until you physically do that draw. So again, in our deal analysis, if the ARV is 100, if the loan amount was 75 and your rehab is 20, on day one, we're not charging interest off the 75, the whole loan amount. We're charging interest off 55 because you really haven't borrowed that 20 yet. So it makes your payments a little more economical. So ethically, we do not charge interest on the rehab funds until you physically draw them and get those funds back. So a lot of people like that, especially when you get into those higher deals, so ARV is 200 and rehab is 60. We're not charging interest off of 200. We're charging interest off of 140 on day one. And as you draw it, it goes up. So that's a huge point I like to tell people as well.
Yeah, that can make a difference. Now, for the new investor, back to my point, I want you to be having regular draw requests, get those funds out. You may not be super flush with cash, so you may need it for that reason anyhow, but just to get the extra eyes on the process. If you're in your 8th or 10th rehab, well, you're a little more experienced now. Maybe you're more comfortable waiting a little longer between draws to your point, Paul, to save on the interest. We didn't talk about this, hard money, right? Hard money. What scared me when I started as an investor a decade or so ago, what scared me back then were the rates were 14%. I was like, holy cow. I was a finance guy. I was like, 14%? Are you crazy? That's usury. No way. What are rates on hard money these days?
Well, welcome back 14 years later. They're around 13%. So you're going to be in that loan such a short time. It's really not the interest where they're going to get you, because you're going to be at the deal maybe 4 months, maybe, hopefully in and out as soon as possible. But yeah, interest rates are around 13.99, 12.99.
So they're creeping back up with the Fed, right?
Yeah, exactly. I think they're having actually another interest rate increase today. So as regular rates increase, you're going to start seeing these numbers back. Again, like I said, there's a lot of lenders out there. I like to put my numbers in writing, so I don't like bait and switch. There's a lot of this stuff out there. I'm like, hey, 60 days, you're going to get 8.99%. But then, you got to watch out for hey, what's the gimme?
Administration fees, loan processing, et cetera. I want to drive this home for the listener. You're absolutely right. And it took me a few rounds of going through hard money on my houses to really understand this. 14% is a per annum, it's an annual number. And we try to be in and out of that loan as quickly as possible, because this is about getting the property stabilized, renovated, and rented. So I don't want to be sitting in that for 12 months. And we're in and out so fast that the interest payment it's nominal in effect. And you write that off too as part of your expenses when you come to filing your taxes at the end of the year on that property. Tell us, I see you, I mentioned the case study. I see you out there. I know I've seen you on some of the single family road trips. Can you tell us about how, what you do at some of the Lifestyles events as a vendor?
Honestly, just be available. There's nothing specific that I'll do, but then just meet people. If it's a case study, hey, I want to put a face to a name and just be able to talk to people. And when you have your clients that they're doing a case study, you're able to answer questions and be available and tell them the process. On road trips, you get a little more detailed because you get a little more personal with them, and you get to talk a little more numbers and a little more, give them the golden nuggets here and there. So that's the answer. It's just to be available, answer questions. And
yeah, you're always talking to people at the case study when I see you there. Tell us a little bit more about a single family road trip. What is that? What's happening?
I love the single-family road trips. That's where you're just going to get a hands-on education. So what that is Lifestyles Unlimited will do a road trip, meaning they're usually going to go to a single-family house that's usually under repair. So it's been a distressed property that one of the members has bought, and we're all going there. And number one, we're seeing the rehab. We're talking about the loan. We're talking about whoever usually 2 or 3 vendors there, maybe insurance guy, maybe a contractor. We're talking about all the parts of this house and what it went in to get it. The purchase price. We have a contractor showing you everything. The road trip is by far the best thing that you can go to with Lifestyles Unlimited. The 2 days get to, but then the road trips are amazing. You meet lots of people. You're going to learn the best stuff. I'm a big fan of the road trips. I loved them when I was a member, and I still like going to them even more now because you can just find some golden nuggets and just meet some really good people.
Yeah, you're there on the lending side now, and I do love that because I can remember one I went to not too long ago in Irving. This is between Dallas and Fort Worth. We went out to the house. Like you said, it was halfway through the process of being repaired. The taped to the wall was the scope of work from the general contractor that was organizing the project, doing the renovations for the member. There was a lender there, and to your point, they talked about numbers, so we could really see, hey, if I'd gone conventional, well, really the deal doesn't work based on the level. This is a big scope of work. Here's what it looks like, cash out of pocket, returns, all that good stuff. You're on site at one of these road trips to share this information and help us better understand how every piece of the puzzle fits together. And for the listener, if you're like I was a decade or so ago, I had zero experience in this space. So going to these road trips really helped me understand foundation repair, understand roofs, what do I need to do in terms of ventilation, some of the basic cosmetics, all of the things that we're doing. I don't do that. I hire that out, but now I understand how it works, what it should cost, what Paul's going to lend to me, how the draw process works, all of the things that we've been talking about today. I've learned that in detail on these very road trips. So, Paul, we're getting to the end of our time. If you don't mind, give us your contact information one more time.
Again, my name is Paul Starnes with Investmark Mortgage, hardware lender. My email is paul@investmarkmortgage.com. My direct phone number is 214-738-4664.
Hey, Paul, thank you for joining us today. We've learned today about hard money, a very important tool in your investor toolbox. Go get pre-qualified. Go find that house. Get that first, that second, that third, that 10th, that 20th rental house in your portfolio and on your way to financial freedom.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.